The gist on what happened in the Forex market and also on the Nigerian Stock Exchange in this past week, and also we give you a sneak peek into what to expect in the coming week. So please come along with us. The highlights for this week, for this past week, has to be the return of the dollar to its safe haven status. So if you remember in our last weekly roundup, we talked about the fact that the dollar turned bullish. All of that changed in this past week. We saw a rise in demand for the dollar. Oil price also had a big rebound in this past week. It moved from its low levels of about $20 to a high of $34 on Thursday, and that was the highest daily price gain ever recorded for oil. And this was because Russia and Saudi Arabia, news went out into the market that Russia and Saudi Arabia were going to cut back on their oil production. These two were the major highlights for financial markets around the world in this past week. So like I just noted, the US dollar returned to being a safe haven. Investors and traders continue to demand for the dollar, despite the fact that negative economic data was filtering into the market from the US. Like we know already, coronavirus is ravaging the world, is ravaging countries around the world, and its economic implication is bringing a lot of fear and uncertainty to financial markets. The IMF announced that there's going to be a depression, not just a recession in the world economy, and so that brought fear and uncertainty to financial markets. And so we saw investors take flight to safety by buying safe haven financial instruments. In one of our weekly roundups, I remember we mentioned that we have three safe haven currencies in the Forex markets. These currencies are the US dollar, the Japanese yen, and also the Swiss franc. So whenever there's a bit of fear and uncertainty in the financial markets around the world, we see investors and traders run to these currencies. For the Nigerian Stock Exchange, it was a week of sell-offs. We saw the market return to a week where we had back-to-back daily losses, and this was because on Sunday the president announced a total lockdown of Lagos State, which is the financial capital of Nigeria, and two other states. We noted in our last week round that this was going to bring fear to the Nigerian Stock Exchange, and that was exactly what happened. Not just that, the fear in financial markets around the world also filtered into the Nigerian Stock Exchange, and so we saw investors take flight to safety. It was a week of sell-offs for the Nigerian Stock Exchange. On a week-on-week basis, the market lost 3.51%. Looking at the month of March, it was a negative month for the Nigerian Stock Exchange, and so the market lost 18.8% in the month of March. Returning now to currencies, on the Forex market, unlike what we've had in recent times, did not trend in this past week. We saw the market move within a tight range. Most currency pairs traded in a range in this past week. Because of the strength of the dollar, Euro USD returned to being bearish. We saw the currency pair lose 300 pips in this past week because the dollar turned bullish. GBP USD also followed in the same stride, but it was trading within a tight range. It moved within the range of 1.2426 to 1.2205. It was a bearish range, but it was a bearish movement, but it didn't trend. It was moving in a range. The currency pair basically consolidated in this past week. USD CAD had a very, very interesting week. It started on a bullish note. If you remember, in the prior week, the Friday of the prior week, the Bank of Canada announced a rate cut, an unexpected rate cut, and the expectation was that was going to have a negative effect on the Canadian dollar, and we saw that happen as the week started. The USD gained strength, and a lot of negative news on the Canadian dollar saw USD CAD move upward. We saw a bullish trend on USD CAD at the beginning of the week, but as the week went on and then positive news came out on oil, we saw, and we all know that Canadian dollar is positively correlated with oil prices anyway. We saw the Canadian dollar gain strength, and so we saw a bit of retracement, a bit of pullback from the USD CAD's bullish run. We saw the USD CAD pull back from its bullish run as positive news came in for oil prices in the course of the week. Now, for the Nigerian stock market going forward, we expect to see bargain hunting in this coming week. The market has taken a lot of beating in the month of March and in this just concluded week, and so a lot of stocks are trading at very, very attractive prices. We expect that bargain hunters will return to the market, take advantage of the record low prices that stocks are trading at the moment. The big one to look out for this week would be the OPEC Plus meeting that is expected to take place this week. So the meeting was initially announced to hold on Monday, but in the course of the weekend it was cancelled, and speculations that it will now hold on the 9th of April, which is on Thursday. So the outcome of that meeting will definitely influence the direction of the Nigerian stock market in this coming week. For the Forex market, it is not yet clear the direction the market will take, but definitely these things will influence the direction of the market. Number one is the OPEC Plus meeting. If it eventually holds this week, it will definitely influence the direction of the market. Then number two is unemployment claims. Unemployment claims for the US for the past couple of weeks has been very negative. So 2 weeks ago it was about 3 million people. Last week was 6.6 million people. This coming week has been projected, has been forecasted that it will be 5 million people. So the outcome of that data will definitely influence the direction of the markets. Ordinarily in the Forex market, unemployment claims, in fact in financial markets, unemployment claims from the US is not a data that investors and traders usually look out for. But because of the impact that COVID-19 is having on the economy of the US, unemployment claims is now a big data that everybody is looking out for. It's giving us a reflection of the effects that the pandemic is having on the US economy. So everybody's now looking out for unemployment claims. The last thing we think will influence the market this week is definitely trader sentiment. So trader sentiment will definitely determine the direction of the market in this coming week. Of course, volatility is expected to continue in this coming week. A lot of countries are still on a lockdown. Market activities are not what they used to be anymore. This week we'll also see a lot of bank holidays. Monday, China has a bank holiday, and on Friday, a couple of other companies will take a break for the Easter. So we'll see a number of bank holidays in this week. So market volatility will definitely increase in this coming week. So you want to be careful with taking positions in the markets. The fact that last week the market traded in a range, most currency pairs traded in a range, that shows you that there's a bit of trader apathy in the market. A lot of people are not participating in the market. A lot of people are not participating in the market at the moment. So you want to be careful with how you take trades in order not to lose money in the Forex market in the coming week. That is it for our weekly roundup for this week. Thank you so much for watching. Please subscribe to this channel. If you're yet to subscribe, I don't know what you're waiting for. Please subscribe to this channel, and you can take it a step further by clicking on the notification button so that you get a notification whenever it is that we post a video. Also, we are big on feedback. We would like your feedback. We would like to know what you think, what your thoughts are on the direction of financial markets in this coming week. So please hit us up in the comment section. Let us know what your thoughts are on the direction of financial markets in this coming week. Also, if you want to learn to trade Forex market, our Forex trading classes are always open. Our email address is in the description box. Please send us an email and we'll give you details on how you can become one of our students. Thank you for watching this video. Please subscribe. We'll see you in our next video. Bye.